one area of the market that is really shining, get it, is metals. Gold is up 1% on the day, but taking a look at the other metals, silver and copper in particular, are surging as well. Joining us now, Bloomberg Intelligence Senior Commodities Analyst Mike McGlone. Excuse me, Mike, it's good to see you. Thanks for being here. I want to start with copper, which has just been such a fascinating story as of late. There have been all kinds of sort of odd supply disruptions. Just for people who haven't been following it as closely, walk us through what's been going on.
Hi, Julie. Well, the significance this week is pretty profound short covering in futures. The CME traded contract that trades in New York, there was some decent short covering those front contracts. It really pumped up the front contracts into a decent, like most significant backwardation in about 10 years and pulled back, which is oftentimes a sign of highs. And so that contract closed at an all-time new high and made new highs, but the LME contract that trades in London did not make a new high, but it's catching up. So to me, right now, what I see is more shenanigans in futures. The futures contracts as a percentage of open interest, managed money net positions, i.e. hedge funds, are very long, about 30% of open interest. So they're already on top of this trade, which is a bit of a headwind. Now, the more macro, there is decarbonization, digitalization, electrification, but there's been some supply issues out of South America and Panama. But overall, I'm more worried for copper that its autocorrelation tendencies will carry through. It usually has a tendency to spike and go down. And basically, the way I say it right now, it's just catching up to gold. Gold has been the star performer in metals.
Mike, I also want to get your take on silver, which has had such a move here. Is this, is it a story, Mike, about industrial demand, or is it financial demand, or is it both?
Well, the macro for silver is it's industrial now. Basically, gold has demonetized silver. But it's known as the devil's metal for a reason, because it has a tendency to spike and then go right back down. So right now, it's the same price as it was first. I guess it's about the highest level since 2013. So it's an 11-year high. It's breaking out. The way I see silver, it's stuck between gold and copper, and it's catching up to gold, and it's got copper in its back. And there's potential rumors that, we know China's been the biggest buyer of gold, not just Chinese central bank, but citizens. There may be some hoarding of silver, but the key thing I'm more worried about silver is that it might follow that path, that autocorrelation and path in copper, where it spikes and then goes back down. In the macro, the big picture, though, I'm very favorable in terms of commodities, most favorable to metals versus most other commodities.
So give us a little bit more detail there, Mike, about then what you expect to happen next. Do you expect that spike and to come back down in a copper, or do you think that there will be a more sort of sustained action here?
Well, let's start with the most enduring trend in commodities, and that is gold outperforming most commodities. I think that's accelerating. I think it's going to continue. And to me, it's just a matter of time gold gets to $3,000 an ounce. I don't know when. Now, it's got very good support now below the market around $2,200. And ETF outflows have been significant. At some point, those will flip higher. I think that's going to take a little bit of a peak in the stock market. And to me, that's the problem with more industrial commodities. Silver is an industrial commodity now. Copper is an industrial commodity. At some point, we probably should see a little bit back up in the stock market. And it's pretty expensive here. Mentioned earlier, the VIX is running around 11% handle. The S&P 500's 22% above its 100-week moving average. That's pretty much oftentimes a headwind for industrial metals. And then there's China. The key thing I'm worried about in China is Chinese CGB 10-year note yield at 2.3%. It's the lowest in our database. It's over 200 basis points below the U.S. That's a sign of deflationary, recessionary inklings in China. So I'm worried about that macro for industrial metals. And the key thing is beta. If beta can keep going up, industrial metals will do fine. But in both environments, I think gold will outperform.